Markets are messy, but my trading strategies don't have to be. Hey traders, welcome back to Breaking Bread with Traders, and I'm your host, Mood. I hail from the land of the free state of mind. I was once a man who lost accounts chasing noise on these same markets, but now I trade with clarity, discipline, and purpose every single day. So in today's video, I'm breaking down a simple but extremely powerful trading strategy specifically for Forex traders, beginners, using the Fibonacci retracement combined with Tokyo session to catch the highs or the lows, probability moves. We are going deep on the gold, analyzing the M15 chart for the bigger picture trend, and then dropping down to the M1 for clean surgical entries. You'll see me mark these levels live and also explaining why price respects them. And I'll show you how I ride the trend until the market itself tells me it's time to exit. Here's exactly what you learn in this video. Number one, why trying to predict the absolute top or bottom is a losing game and what to do instead. Number two, how to spot strong institutional grade trends on the M15 timeframe. Number three, the difference between impulsive moves and corrective moves. This is where most beginners get trapped. And number four, I believe this is number four, right? The exact entry signal I wait for, including confluence with supply and demand zones that actually work. Number five, bulletproof risk management so that you never have to blow an account on one bad trade. This is in theory. This is the same approach I use in my own trading. Prayerful, disciplined, and focused on protecting capital while letting my winners run. If you are tired of complicated indicators, fake signals, and losing money trying to guess where gold is going next, this video is made for you. So stick with me till the end because I'm also going to show you a real setup I took recently so you can see exactly how it plays out in live conditions. Drop a fire emoji in the comments if you are ready to trade cleaner and smarter. Let's get into it. So before us, we have a gold chart. And the first thing that we are going to do is make sure that we are on the M15 time frame, and then we are going to zoom out, right? So as you can see, recently price has just been dropping on gold, right? So we are going to, number one, focus on the impulsive moves. Number two, we are going to focus on the tops or the bottoms of the Tokyo sessions. In this case, because we are selling, we are going to focus on the top of the Tokyo session, and then we are also going to focus on the supply zones of the Tokyo session because we are selling, right? And then we are also going to apply a Fibonacci retracement tool. Firstly, let's focus on the impulsive moves, right? This here is an impulsive move. This here is a correction. This here is also an impulsive move. This here is a correction, right? So the way you spot an impulsive move is when price is moving very impulsively to the downside or upside, right? So this here is an impulsive move. This is what we want to focus on, right? And this right here is a corrective move, right? And we're just going to clone this. You see, we have an impulsive move and a corrective move, and then another impulsive move. That's how the market moves, right? So we are going to plot our horizontal ray at the top of these impulsive moves, or the beginnings of these impulsive moves, just like here, right? And then we basically wait for price to come back at this impulsive move tops, and then we look to short the market, right? And then the same can be said with this one. This is the top, price came back here, we wait for price to come back here, and then we short. And then this is also the top. We wait for price to come back here, and then we short, right? So I'm just going to move these where we won't be able to see them, right? Okay. All right. Okay. That is the first thing that we're going to do, right? So since we can spot this impulsive move, we want to get in somewhere around here. Okay. So one indicator that you can use if you are struggling to find the Tokyo highs and the Tokyo lows, basically this is rule number 2. We have to get in on the Tokyo highs because we are selling. But if we are buying, we want to get in at the Tokyo lows, right? So you can come up to your indicators and search sessions. I use this one by Lux Algo. You can put that in, and then you come up here, you see the 3 dots, you click there, and then you go to settings, and then you basically just uncheck the New York, you uncheck London, and then you uncheck Sydney, and then you just leave the Tokyo session, right? And then you will see that it has removed some sessions, right? Okay, so once we have that, we are going to take our Fibonacci tool, and then we are going to plot it at the beginning of the Tokyo high up until the bottom of the Tokyo low, right? And then as you can see, we are targeting price to come back. Any retracement above the 50%, as you can see here, we have 618 and 786. I basically target anywhere between these two retracements, right? And then we are going to focus, because this is an impulsive move, we are going to also plot our horizontal ray at the last candle before we had an impulsive move to the downside, right? Because this is where you'll mostly find demand has turned into supply. If we are selling, and if we are buying, we're going to find that demand has turned, supply has turned into demand, right? So when you move to a M1 time frame, you'll see that we had a touch here. This is a demand level, and then price pushed up, and then price came back here again. You know, others will say it's this is a support level, and then it turned resistance, whatever you want to call it, it's fine, right? So basically at this horizontal ray, this is where we look to execute our positions, right, in future. So let's move forward. Maybe let's go back to M15 time frame, right, and then zoom in. Okay, so like I said, this is where we look to take our short trades, right? And then this is our entry, and then we use our short position to plot our stop loss. So we are basically going to target the top of this impulsive move. You know, this is where we can place our stop loss. You can also, maybe for safety, because sometimes price can, you see here we have a liquidity, price can take out that liquidity before it drops, right? So you can also move your stop loss just slightly above the Tokyo high, right? Since we are selling, and then you target a minimum risk to reward of 1:3, right? And then there we have it. And you see here on Tuesday, it's actually early mornings of today. The TP was hit basically 1:3, right? So remember, step 1, focus on impulsive move. Step 2, you put on the Lux Algo sessions indicator, and then you remove other sessions. You only leave the Tokyo. And then step 3, you focus on supply turned demand, or demand turned supply. In this case, we had demand turned into supply, and then before that we use our Fibonacci tool to highlight any retracement above 50% or below 50% if we are buying, right? But in this case, because we are selling, any retracement above 50% is good, right? And you see price came here and then it dropped and we hit TP, right? So let's move forward. Let's look at another setup. You see everything happened within the Tokyo session, right? So also today we had another opportunity to get in on the market. You will see that we are having an impulsive move. However, this impulsive move has already been tested, right? So another rule that I left out is that the impulsive move needs to be fresh, right? So we are going to discard this one, and then we are going to focus on this one. As you can see, this one is the freshest one, and it was never touched up until this level, right? So impulsive move, here it is. We have a corrective move, but we're going to focus on the top of this impulsive move, and then we are going to take our Fibonacci retracement. We start at the top of the Tokyo high up until the low of the Tokyo session, right? And then once we have that, you'll see that we focus on the Fibonacci retracement anywhere above 50%, right? As you can see, we have 618 and 786, and price just tapped the 6181 before it started to plummet, right? And then step number 3, we are going to take our horizontal ray to plot the last bullish candle before price started to go down, right? And when we go on the M1 time frame, this is where you see your support or resistance level or your supply or demand, right? So you will see here we have one touch, second touch, and third touch before price started to move, right? So this is where we look to enter when price comes back there in future, right? So let's go back to the M15 time frame. You will see that this is where we look to short the market, and then we put our risk to reward slightly above the beginning of the impulsive move, or if you want to be safe, you can put it slightly above the Tokyo high, right? So target minimum risk reward of 1:3. Like we have our minimum risk reward of 1:3. Price is just about to hit that, and this is basically it, right? This is the easiest trading strategy for Forex beginners, especially when you want to trade gold, because this is very consistent strategy. You understand? So if you enjoyed watching this video, make sure to give it a thumbs up, and yeah, make sure that you subscribe. I'm out. Peace in the Middle East. See you in the next video.